Are we live?
Yeah, dude.
All right, guys. Sorry I'm late. Welcome to Get Technical. My name's Neal, and we got DJ AB here playing the Pizzle Pack by T-Pain. Yeah, if you guys want the Spice Girls from the Pizzle Pack today, make sure you hit that like. Producer AB is in a mood. Guys, I gotta tell you, today is the most Monday of Mondays I have had in a while. Like, it is the most distilled concentration of Monday that I've experienced in a long time. And then just like that, the music stops. And that's great. Great transitions from our producer AB. All right, guys. Let me first off, let me take over the chart.
Have you ever seen the movie Office Space?
Never heard of it.
Well, there's a joke in the movie where he's like, is someone having the case of the Mondays?
And then the guy burns the building.
So you have seen it?
Of course I have. For God's sakes. For God's sakes. You're making Shelly angry. They're in a huge mood. Are you in a grumpy mood?
She's been, upset at me.
All right.
We've been having some marital problems, but I'm sure we'll work it out.
Gonna be a yikes from me. Let's go ahead and get AB off the screen. Guys, what are we looking at today? So without asking me, AB titled the video Options Plays for Monday, which I'm glad that he didn't do that on a Friday. Right? So you know what? If that's the name of the video, that's what we're going to do. We're going to look for optionable opportunities in the market. Guys, give me a 1 if you guys want to find those. Peter, right back at you. A Peters, right back at you. Let me know if you want to look at some options opportunities. Slippery edge? I don't know. Honestly, your name confuses me, and I want to know if that's meant to be ironic, because that actually makes me kind of worry. Like, maybe you need some antibiotics. Maybe you need a run of antibiotics.
Just a quick producer note. We could use like 1 or 2 notches up on the volume of the music. There we go. Yeah.
I mean, I'm just never going to make anyone happy. That's just the way it is. Let's do it right.
Yeah, but you should get as close as you can to making me happy.
And you know what? That's all you can ask a guy to do. Honestly, we just don't know. We just don't know.
Dude, that beard oil working, bro. Things coming in thick.
This is what every day what I do. I play this song. All right. I text my broker and I say, get your ass out of bed. All right. I send that text out. I spit in my hands. I go. Get that beard ready for Get Technical. All right. I text AB. So you out of the hospital yet? You out of the hospital? Pull that IV out. We're doing a show.
And I have to sprint through the nurses because they're like, hey, you can't leave without being discharged. And I'm like, I have a show to do.
And then someone's like, that's the guy from Get Technical.
I know.
Oh. Get Technical. So we got the screen up here. All right, so I'm looking at BTC. I don't care. Where's Bill the Strangler? The Scranton Strangler is here. Hating on us for cryptocurrency historically. Don't be that way. Don't be that way. God, what a run. What a run. Let me know. Give me a 1 in the chat. Give me a little if you've been in Bitcoin since we called it. All right, this nice little pullback looking nice. I mean, you could have made 36% returns on your investment, my friend. Come on. And Bill, I'm just using you as an example. It might have been someone else. I think there was someone named Tiny Bill, that a squirrel avatar. It might not be you. But Bitcoin looking healthy, guys. Bitcoin is right at this level of resistance. We get the breakout here, babies. We get the breakout. I'm going to buy some more. All right. Let's see. What else are we looking at? Okay, so something optionable. So Palantir. I am still on the Palantir train. We're getting a little sideways consolidation. Consolidation reduces the cost of those options. All right, they're kind of expensive right now. I'll be straight up with you. You're gonna drop at least a G if you're getting a good options contract that's like 60 to 90 days out. If you're getting calls, but I'm telling you, we break out of this resistance. Palantir going up. Yeehaw. Unity also expensive. Someone I posted about Unity on Twitter, and someone sent the Rick James Unity. You ever seen that, AB, or is that before?
I don't know who Rick James is.
Got it.
I know who Dave Chappelle is.
Okay. Well, then obviously, if you made that connection, you obviously get it.
I don't know what you're referring to.
Okay. Probably the most famous single comedy sketch of the last 30 years.
Dude,
without
Dave
a doubt.
Chappelle's
There's like Cowbell and then Rick James.
Dave Chappelle is like legitimately a genius.
He is legitimately a genius.
He was just in Detroit for like a week straight. I'm kind of upset that I didn't go because I was like, when am I going to get an opportunity to go see my boy DC live again?
I've seen him twice.
Really?
Yeah, dude, those tickets were like $450.
Yeah, I was talking to Mr. Hot Stocks, Luke Jacoby, about it.
Never heard of him.
And I know he's this guy. He like, I don't know. I think he like freelances at Benzinga, does some temp work.
Oh, he's the intern. I heard about him.
Yeah, but he does some strong work, like good work ethic. Needs some direction sometimes, but a lot of potential there.
I feel like he could dress better. Is my one thing about him. But yeah, okay. As you were saying,
he kind of dissuaded me. He was like, "Yeah, I went one year. It was a little expensive, and you know, it is what it is." But I was telling him about it, hoping he'd be like, "Oh yeah, Aaron, let me go buy you a ticket because I'm, an intern here." But it is what it is.
Your internship is just about up, and we can't wait. We're all doing over-unders on whether we're going to keep you, AB.
Hey, well,
you want to know what position I took?
I mean, if I were personally going to do it, I would take the under because it'd be a little like self-hedge. Like, because if I get taken, then like, okay, great. If I don't, then hey, at least I won the bet. That
is a galaxy brain take. 200 IQ.
Yeah, I mean, they don't keep me here for nothing.
All right, so we're looking at Unity. I really, 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 really like where this is right now. This thing, if you guys follow Cordova Trades on Twitter, Julia Cordova, she told me about this pattern. I'd never heard of it before, but she calls it the sandwich, and it's in the shape of an N. And this is basically you're targeting the previous high in this shape. So in this case, we're targeting 128. Options contracts very expensive on that if you're getting them 60 to 90 days out. Going to be straight up with you. It depends on your what you want to put into it. And I'll tell you guys right now what I do with options when I'm swing trading options. All right. I'm buying the call based on the price structure. All right. I will either do, so let's say this is the current price. I will either do in the money or one or two out of the money, like this. All right. So this is the ITM right here. And that's pretty expensive if you're doing swings, which you should do a minimum of 60 days out, because anything under that is weird. So that guy like 2.5 to 3 months out. And then if you're scalping them, that's another discussion. That's a lot cheaper. If I were scalping Unity, which totally can be done, we go down to the 10-minute. Absolutely can be scalping options on this bad lad. We got a little cup without handle forming right here. Very clear line of resistance. Boom, boom, boom. Ain't nothing wrong with looking for a breakout in the 10-minute sessions on your candles above this previous line of resistance and then shooting for something around this gap. In the money, options contracts expiring this Friday can get you there. And look at it break out. Wow, that's crazy. That's crazy. It's breaking out. I don't know if you can see this on your little TiVo TV or whatever the hell you boomers have, but you were getting that young breakout that I just mentioned. So that's how I would play that.
Wait.
Travel, congrats on the 500 plus today swinging SPY calls. Let's go. Let's go. Let's take a look at SPY. Let's look at the overall health of the market. And then AB, you're about to say something really smart.
Yeah, I didn't want to interrupt, but I was gonna suggest that we do something on the show that we don't.
No, that was for travel stocks and locks.
Oh, okay. I thought you were.
Yeah, I'm not just being an asshole.
I was going to suggest we do something that we don't typically do on the show and do a little live trade. I like the Unity thesis. I'm looking at some options in my Robinhood portfolio as we speak. And I'm in a mood today, Neal. I want to deploy some capital that I have sitting in Robinhood. So I think, if I have your blessing, we can find a strike price. It looks like the earliest expiration date that we have is September 17th, which is good for me because it gives us about a month, 3 weeks. And I can look at some strike prices that are just out of the money. And after we check out SPY, I'm going to pull my portfolio up.
Oh, okay. Yeah. Let me look at SPY really quick. SPY, I mean, this is great. Just use your Bollinger Band, guys. Just use your Bollinger Band. Give me a 1 in chat if you don't know how to use a Bollinger Band to trade. Give me a 2 if you already know. And same thing if you're in the comments. Let us know in the comments. Yeah, good move, Travel. Absolutely a beautiful chart. All-time highs, SPY. I also, for investing, I use VU, which is basically the same thing as SPY, but it's the Vanguard ETF. But for options, SPY, baby. For liquid. So we got some folks that do not know how to use the Bollinger Band for trading. That's awesome. I'll tell you straight up, Bollinger Band, well, that can get you halfway there most of the time. So the Bollinger Band is a great tool for identifying entries and exits in stocks that are in clear trends. So emphasis on the phrase in clear trends. So if we're looking at IWM, which is the Russell 2000 ETF, this is not a clear trend, right? Previously it was. What was the trend? Upward. We were in an upward trend. Now we're going sideways and it's very, very choppy. Okay. So this is if you want to day trade this, great, because it looks like every time it hits this support level, it bounces. So there you go. And it's gapping up today, high or low, which is also interesting to see. But we're looking for clear, in most cases, this is the only way I trade, upward trends, which if we go back to SPY, we're in. So let me delete everything. And if we just draw it, I mean, you don't just use your eyeballs and just draw it. Get your little crayon out and you can see sustained upward trend, drawing that line on the right side of my candlesticks as always. And just showing that we have a very basic rough level of sloping support going up that every time we go down to it, we have bounced back up. We spiked back up. It's a darn good time to buy a call option and bet. Again, this is lottery. We're putting a little money into it. Buying an in-the-money call option, betting that it will go up to the upside. And remember, this is a lotto ticket. We're making our income in other ways. We're investing. We're diversified. We're in stocks that are just printing money. SPY, I use VU. I put 30% of every single paycheck goes directly into the stock market for me. All right. And then out of that, 10% is going directly into VU. All right. And then when I see dips, I'll play around with them. And that's what we're talking about today is the play around situation. So now, how does the Bollinger Band fit into this equation? How do I use the Bollinger Band to make good swing trades with options, stocks? You turn on the Bollinger Band indicator. All right. Red line on the Bollinger Band is one of the most popular moving averages, simple moving averages in the history of technical analysis. Dow theory up through modern day investors, hedge fund traders, investors, allocators. The 20-day simple moving average is a general line of health for every asset on the planet. And so that's our center line, or in other words, sort of our mean or our average of the previous 20 session closes on the day chart. Now, if we think about trends like statisticians, which we should be doing, trends should stay within 2 standard deviations of the mean as they go up. That's a little calculus for you. All right. And as it is applied to the stock market anyway. So the top line and the bottom line here on our Bollinger Band are really just another way of visualizing a bell curve. Most of our data points are here in the mean, the middle here. And then if we go 2 standard deviations away that are calculated in real time in a lagging, well, in lagging time, but as we go up, we get these upper and lower boundaries that we expect the data points or the prices of our candlesticks to get out to. Now, when we hit them, we have found that statistically, stocks tend to hit the upper and lower boundaries and then return to the mean. Sometimes they'll bounce off the mean, like in this case. We got to the lower standard deviation on the Bollinger Band. We got a reversal. We hit the mean. We rode the mean, which is the 20-day moving average. We bounced back down. So when you saw this red candle, you knew it was happening. Probably if you saw this weak candle before it, you probably had an idea that we were not going to bust through the mean. That it was serving as resistance at that point, and you could have gone short and bought some puts on SPY. Then we went back down to this lower standard deviation, and what do? We gapped up. And then what happened when we got to the 20-day moving average this time, or the mean? We broke through it. We broke through that resistance. All right. So these are buy and sell signals, just constant. And what you really want when you're looking at a good trending stock is a stock that tends to bounce and then loftily sort of ride above that 20-day moving average before coming back down. And so here's a nice example. Like, look at this. I don't know how many trading sessions is that, like that's a couple, 3 weeks, something like that, of it just loftily just increasing. And you feel good. Like, yes, we got a couple of days down here on the Bollinger Band, but you know what? We haven't even touched the mean yet. All right. So I'm still in this thing. I'm not exiting until I get a clear indication that we're going to return to the lower standard deviation. Now, had you done that, you would have entered here when you got confirmation that we were bouncing off the lower standard deviation. And then you probably would have sold around here. And that would have been 4.51% on a big portion of your portfolio, which is a pretty stable asset, the SPY ETF. So that's just damn good swing trading. Now enter options. What increases the price of an option after you buy it, guys? Let me know. Let me know in the chat. While you're doing that, I'm going to refill my coffee because I need more. So what happens when volatility increases to your options, the value of your options contract?
Wait, you just gave the answer of the question.
No. What to the value of your contract? What happens when volatility increases?
But the first time you said what increases the price of the.
Still answer it because I need to get my coffee.
All right,
thank you. All right, AB, keep these maniacs entertained.
All right. Do you want to see me do a magic trick with my hands? No, I'm just kidding. Yeah, so if we see, the price goes up if the implied volatility. So when IV increases, the price increases. Yeah, definitely. You guys get it. You're a smart bunch. Speaking of volatility, we saw someone in the chat saying they were looking at calls on VIX right now. Let me see if I can go find that comment, see who it was. I believe it was Michael, maybe. Yeah, Michael Lee. Good time to buy some VIX 16 calls. Michael, what's your thesis there? Because I'm curious, because in an overall look at VIX, we can see it's in a big downtrend. We did see a little spike up last week from what's going on in the Middle East and Afghanistan, as well as some Delta fears. So what's your thesis, Michael, there? Is it you think Delta variant becomes more of a big deal? People see some uncertainty, VIX goes up. Is it more in line with the geopolitical situation? I'm curious there. I honestly, I wouldn't mind to see a little spike in VIX. I think we could use some more volatility in the market. But a lot of times when the VIX is going up, it means the market is going down. Let's see. Anyone else have any options contracts they are looking at? Michael is looking at the VIX, which again, let me just pull up my Benzinga Pro and Neal's back. Neal, do you want to pull up VIX or VXX real quick to get a look at that?
Let me get a in chat if you guys know the secret of instant coffee. For all my instant coffee lovers, let me get a. And then for all you pretentious snobs, just be silent. I don't want to hear anything about a French press. If you can go to France if you like a French press. No offense to my French viewers, we love you. No sugar. Sin azugar. Okay. So what are we doing? Looking at VIX?
Yeah.
I don't play options on the VIX. This is what do you? I don't do this. The boy doesn't do this. But you could kind of use the Bollinger Bands, but it like goes so far outside of it. All right. So what do you want me to do here, Aaron? You've detoured me. I assume you have a point. Oh, and he pulled himself off the stream. That's great. So there's the VIX, guys. Yeah, so you guys are absolutely right. Cold brew? No. Cold brew. I get cold brew when I go out. I don't have patience for a cold brew. Instant coffee. I know why you're smiling. I don't know why you're the little emoji is laughing.
What I miss?
I don't know what you missed. What do you want? Why'd you make me pull up the VIX?
Because one of our astute listeners / viewers, Michael Lee, was saying that he was looking at some calls, and I was asking him what his thesis was on it. And basically, is it, you think the VIX is going to go up because of Delta variant? Do you think it's going to go up because of the geopolitical situation? Do you think it's going to go up because the market starts selling off? I think there's a lot of potential causes, and I was just curious about his thesis.
Oh, okay. And I've got an answer.
Okay.
It might.
Yeah, no, definitely.
And that's it.
Our very illustrious guest, Chris Capre, is saying that he can talk about VIX as well.
All right, good, because I really don't want to. So like the VIX is helpful as where's this? I'm assuming gentleman, not slippery itch, which really you're starting to make me worry. Just go to the doctor and ask for clindamycin, doxycycline. Ask for some doxycycline. Trust me. Okay, where? I put cinnamon in my coffee. That's the one thing I'll add to it. You brew it ahead of time. You think I have foresight? Do I seem like the type of person that plans ahead like that? Okay, so are you guys satisfied? We were talking about the Bollinger Band on SPY. I hope that you guys were found that helpful. In this situation, I just want to finish that little lesson that I was doing for the folks that weren't totally familiar. With something like the SPY, which is generally in some form of clear trend, the buy signals are clear. You don't buy when you have a red candlestick. You can if you're a little more advanced, but I'm doing this real simple like. You don't buy just because you hit a level of supposed support. All right? You buy when you show that when it shows you that the bounce is coming. All right? So with the Bollinger Band, when we see this, we get that nice open around here. That's when we enter, and we're aiming for the median. And when we pass the median, we're aiming for that upper standard deviation, babies. That's how the Bollinger Band works. And it's an extremely useful tool for swing trading, both common stocks and options, for assets that are in clear trends. All right? Not Chop City like IWM. Okay. I got my coffee. Now I'm very happy to bring on our most illustrious guest, Mr. Chris Capre.
What is up, Zingers? How are we doing?
I'm doing well. How are you today, sir?
I am good. Minus the fact that here in Nevada, we are being California's ashtray for all the fires. Other than that, I'm good. Yeah.
Wow. I mean, what all of this stormy weather that we're having lately, it's crazy. It's almost like it's getting worse.
Well, you're in Michigan, aren't you? If I'm right, you're in Detroit.
As far as I know, yes, Detroit, Michigan.
I don't know what is going on there, but yeah, the fires there are pretty bad. The current Calder fire is, the big one. It's almost as big as the biggest fire in 2014, and it's still not even remotely contained. And so you have all these fires going, but the winds are blowing west. So basically all the smoke and ash has turned Nevada on my side of Lake Tahoe into an ashtray. Like you can, the sun is red and the moon is red every day. It's been that way for a month minus 2 days.
Wow.
So, yeah.
I mean, that sounds rough. It's also the most metal thing I've heard in a while. But I hope that you and yours and of course your neighbors are staying in good health, because I know that's not great for the air or the environment.
No, it's at unhealthy. The AQI, air quality index, is at an unhealthy level right now, to the point where normal people, if they walk outside, they should be wearing like masks or respirators. Basically, it's that bad.
Yep. And our viewer count just dropped by about 20%.
Yeah.
Just kidding. Okay, see you guys. All right, so Chris, we were talking about the VIX, and someone mentioned a really good thing where which would be about the extent of me using the VIX, which is checking on it as another indicator of what I might do with something like a broader ETF, a broad index ETF.
Sure.
So I'm wondering what you think about the VIX and how it plays into your perspective of the markets.
Sure. So,
and don't forget to share your screen.
Yes. So first off, I generally use VIX as a combination of a day trading indicator. If VIX is rallying on the day, I'm going to watch the 1 in 5 minute on that. And I'm going to look if I think that SPYs is coming into an area where option dealers are going to start buying up SPYs, either by futures, or they're going to actually start getting long calls or selling off their short calls on that. Then I feel like, I can use that as kind of like a timing indicator. This lad was saying, hey, I'm thinking about getting long VIX at 16. And here's the thing about being long VIX at 16. From a location perspective, it's a great location. But the thing is that VIX, you need VIX to move. If you're going to be long calls, you're long gamma. And every single day that this doesn't move, your position deteriorates. You're short theta, basically. So you are exposed to theta decay if you long VIX at 16, and it's taken a while, many times, for VIX to get off the mat of 16. Mm-hmm. Sometimes it's just sat there. And so volatility selling has been more profitable as a whole than volatility buying, as we can see. Most of the time, it's closing in the week down. That means volatility sellers are making money. So the thing about VIX is, in my opinion, why would there be a case for a VIX this week? We do have one event. Forget the Afghanistan thing. Forget the COVID Delta variant. We have one event that is already, we've already seen kind of traders starting to potentially want to protect their positions. And they've been doing so not by selling off their current long positions, but by buying up puts. Puts are starting to get more expensive. And we see that leading into the Jackson Hole event. We got Jackson Hole this Thursday, Friday, 26th, 27th.
And what's that for folks that don't know?
So the Jackson Hole is the big Fed meeting where they go to Jackson, Wyoming, basically. They meet with a bunch of central bankers and business leaders all over. And they're kind of basically giving a heads up as to what their policy, ideas are going forward. They've been some hints at potential tapering, potential rates rising. I believe rates may have a chance to rise, but we tried that experiment, not too long ago. And as soon as that happened, the markets freaked. And then the Fed's like, okay, we're not raising rates anymore. That may be the case right now, but just even the whisper of rates rising is going to increase volatility in the markets. It's going to help financials. And so bank stocks will do well from that, but it's going to have an effect upon volatility. The way I'm looking at the markets right now is SPYs in a positive gamma territory. That means that the market is more long options than short options right now. And that tends to reduce volatility. And the gamma is, the positive gamma is significant enough that it's suspecting, okay, we're going to have a little bit of volatility this week leading into Jackson Hole. But unless we get an early sell-off to kind of pressure some of these people that bought put protection, you're not going to see really a huge spike in volatility. If you look at SPYs today, it's been mostly on the bid. And so very strong. It is rolling over a little bit. We're kind of getting close to max move. I don't see SPYs getting above 450, 451 leading up to Jackson Hole. In fact, based on the option positioning of the dealers and market makers, the higher we go, the less incentive they have to buy it. And so because they would have to actually start unwinding some of their position at that point. So I don't see a lot of call fuel for the market to go beyond 450 prior to Jackson Hole. If we were to get a massive sell-off today, maybe tomorrow, then I can see implied volatility picking up, and that could be a good short-term trade for VIX. Being long VIX going into Jackson Hole, I wouldn't want to take the theta decay until the day before the day of Jackson Hole. That would be the only way to do it. Otherwise, you're just going to be exposed to a lot of theta decay, and it's not really worth it being long volatility. So when I look at it is the way the options positioning is, and if I could draw it kind of like a market profile, so to say, the way the market positioning options is looking like this. It's very thick. We have a lot of thick. I'm just looking at it up here, all the way between 450 and 440. It gets a little bit lower in 440. It's thickest at 450, 445. And then you have some decent at 440. But after 440, it looks like this. So there isn't much gamma protection below 440, and there isn't much fuel above 450. This is before Jackson Hole. Once we get into Jackson Hole, all bets are off at that point. We could see a big spike in volatility. They mentioned rates are tapering with any sort of seriousness. You could see tapering. That's obviously a risk-off event. Rising rates could be a risk-off, but it could be good for some stocks. So I suspect we'll be stuck between 440 and 450 leading into this. If we get a massive sell-off today, so like today we close below, say, if we were to close below 445 today, and then tomorrow we're selling off pretty aggressively below this gap, 442, 443, then I can see IV starting to pick up. Otherwise, the idea of just being long VIX and long gamma at 16, just because it's a good level, hasn't really been a good play. It's been a losing play most of the year with only a few weeks sprinkled here and there of making money from it. So that's my thoughts on the VIX complex. You feel good about that before we move on?
I'm feeling good. If you guys have more questions about VIX, drop them in the chat and we will return to it if needed.
Okay.
What are you looking at for the week ahead?
Yes. So in terms of options, I'm looking at 3 right now. I'm looking at IWM right now. I'm looking at NVIDIA, and I'm looking at Tesla. So IWMs, I'm waiting for a little bit of a pullback. I would like to see IWMs. Let's pull out the weekly on this just to kind of show you. And I'm thinking a broken wing butterfly in IWMs. I'd like to see IWMs get to about 215. And then what I'm thinking is we get on a broken wing butterfly. Basically, it's a butterfly. Let's say you are a retail. You're going to buy 1 call at X price. You're going to sell 2 calls at the next price, and then you'll buy another long call further up. So a normal butterfly from a P&L perspective is like an even tent. When you go broken wing butterfly, you go long, you go short, and then you go long a little bit closer. It's broken because it's not evenly spaced. And that changes the payout from an even tent to this, depending upon how you space it. And if you do it right, sorry, I should redraw that. Like that. And this is your break-even line. So I am bullish on IWM if we dip towards this 215. I would like us to get to 215. And then I'd like to do, say, the 215, maybe the 225s, which gives me a 10 wide on the first strike. And then 225 to 231, buy the 231s here. So sell these calls, buy the 215s, sell the 225s, buy 231. That's $10 between the lower and middle strike, and then it's $6 between the second and third strikes, the middle and upper strikes. And so that would create this kind of thing. It's a bullish play, and generally your break even is like this. And so as long as it closes above your break even strike, it doesn't matter how much, you're going to lock in some profit. There's no way it could go to the moon. You'll lock in some profit. The key is where does it close at? If it closes at your top strike that you're short, which in this case, maybe the 225s, then that's your max profit. And so there's a chance for it to be, a 3x, 4x, 5x cost of the premium to get into it. And so it's saying, hey, I'm bullish, but I don't know how much this is going to move. And so I'd like to be able to capture any amount of upside and still walk away with a profit. So I'm thinking broken wing butterfly on that one. I only like being bullish once we're at like 215. I think between 211 and 215, I think IWMs is supported. The second one I'm looking at is semiconductors, and it's hard not to like NVIDIA after their earnings. They have their earnings, they gap up above this high, and they've just been shooting right out of the gate. So it's hard not to be long the semiconductor space. I think semiconductors are going to be in a great space for the rest of the year, and for two main reasons. Inflation on prices and the cyclical demand of, with the shortage and everything going on. I think that's all bullish on semiconductors. I think the best sectors going into the rest of the year, semiconductors, industrials and basic materials because of the infrastructure bill, and then I like financials. Those are my top three sectors for the rest of the year. So when I look at NVIDIA, I don't want to buy at these current prices, but if we could get a little bit of a dip, maybe to 210, 210 right around here, which is kind of where we gapped up 208 and then 210, we were kind of launching from here. If we can get a pullback to 210, I'm thinking a play for the rest of the year. And so I'm thinking that NVIDIA is going to close strongly this year. I'm leaning towards a 240, maybe a 245 plus close for the year. And so if we get back to 210, let me mark that right here. And what I'd like to do is either one of two plays. Go long a bull call spread, which means buy the 210s, or I can buy slightly out of the money, maybe 215, 220s. And then I would sell the 240s or the 245s. So that's one play. That's the bull call spread. You just pay a premium to get into it. Your max profit is at whatever your upper strike is. If you sell the 240s, if it pulls the 210, you buy 210, you sell 240. If it closes at 240 and above, you get max profit on that. If you sell the 245, same thing. You need to close at 245 or above to get max profit. The other option I would play is a ratio spread. Ratio spread, then, if the market pulls back here, I'd like to sell the 220s. And when you sell a ratio spread, you're selling 1x amount at the calls that you're selling. And then, you're buying, you're getting long calls here, and then you're selling double the amount at a higher strike. I looked at the ratio spread pricing, and when I look at that, let me show you how it plays out. So let's see here. Can you NVIDIA back ratio? Let me just make sure that that's good to go. Yep. Okay. That looks good to me. So NVIDIA back ratio, and can you all see this graphic right now? Yes, no?
Yeah, it's on there. Yeah.
Okay. So an NVIDIA back ratio for the for the January expiry, January 22 expiry. If I was to buy 10 of the 220s and sell 20 of the 245s, basically what this does is creates an uneven tent. If it closes lower, I make a minimum of 210 credit. As it accelerates up to the 245s, which is the strikes I'd be selling, that increases my profit, basically. So I'd be long 10 calls, but then short 20 calls, using the short 20 calls to fund the long 210 call or the long 220 calls. And I get enough credit from selling double the amount of 245 calls to walk away with a net credit. So if NVIDIA tanks for the rest of the year, I walk away with a net credit. If it closes right at my 245, then I walk away with about a $30,000 profit on this one here. My break even to the upside is 272.02. So anything past 272.02, I start losing money. But there's an easy way to hedge this. If NVIDIA just keeps climbing in terms of price, and I feel like, we're close to the end of the year, but this could easily close above 270, I just get long the amount of shares to even this out. If I'm long 10 calls at 220 and I'm short 20 at 245, then I only need to long 1,000 shares at whatever price between 245 and 270, and then it turns it into a bull call spread. If I buy when it's at 260, it flattens out the payout right there. Boom, I get a max payout. That's it. As long as it closes at 260 and above, there's nothing else. It could go to 300, 350, 400, doesn't matter. I've maxed out my payout. And so it gives me a way to really adjust this position nicely. I'm bullish on NVIDIA. I'd like to be long shares, but this is a potential way to enter long and take a long-term bullish view on it, and then add shares if you wanted to hedge the position if you need to, and then you erase the downside exposure here. So those are my 2 plays on NVIDIA. Again, bullish on semiconductors as a whole. The last one, potential day trade for today. I think that last week I would have been happy to be a seller at 700, but we've had a very nice kind of burst through on Tesla 700, and it hasn't even come back to it. So I think if the market drifts back here, maybe in an hour or two, I would be happy to be long calls right at the session VWAP or right at 700, stop just below this here, and then look to recapture the highs. So get long on a weak pullback, a corrected pullback, long it to the close, and close the options out right before the close so I don't take any theta exposure. And I would do end of the week options, August 27th expiry. So then I just take it, get a quick gamma move, scalp, and I'm out of it and done. I think Tesla should hold above or close above 700 today. Unless it has an aggressive sell-off, I feel like it should close above 700 today. And if we get there, I'd be happy to do a day trade on it. Just long calls. Very straightforward. So that's pretty much it. Those are my 3 option plays for today. Are you down with me doing some open Q&A?
Yeah, let's hit it, guys. Bring those questions on. I think you probably got a couple here already.
All right. So
some are mentioning specific tickers.
Chris, I have a question.
Yes.
I have a BABA call that I bought. It's up
Okay.
11% right now. I bought it last Friday. It expires late November 19th. $175 strike price. Like I said, it's up about 12%. Should I sell it?
You're just long calls?
What?
You're long calls, or what's the position?
Yeah, I just have one call contract.
Okay, one call contract. What's the strike?
175.
175.
In late November.
Late November. Okay.
Like if I had multiple, I would sell 1 or 2 and let the other one ride. But since I only have one, I'm kind of in a pickle whether I should, let my thesis play out or just take the quick 12% on the contract and get out.
Okay, so here's what I'm seeing in terms of the option complex. If I look at the option universe and all the options in the world right now on BABA, you have about 2.3 million calls. That's a combination of long and short calls. And you have about 1.85 million puts. The biggest gamma exposure right now isn't till the end of the year. Or sorry, actually January 22 expiry. So the January OPEX. So there's no short-dated options that you have to worry about right now in terms of monetization, bullish or bearish or anything like that. I don't see a whole lot of, I see a lot of open interest puts around 200, which tells me that those are people that are long puts. You wouldn't be short puts with the market at 160 right now. So it seems like there's a lot of traders that are speculating BABA is going to have a hard time getting above 200 this month, maybe next month, maybe in the month after that. When I look at the call side, I don't see a whole lot of, the biggest in terms of open interest, in terms of strikes, is 220. So there is some fuel, but I feel like short-term 170 is a key gamma strike. I think it's going to have a hard time. I think the market's going to have a hard time getting above 200. I think the market's going to have a hard time getting above 200. So if you're just trying to play this from a short-term perspective, like what was your thesis? I'm just going to be long calls and try and get a little appreciation on this. Were you planning on holding through expiry? Like what was the thesis? So I can kind of
my thesis, Chris, was always like, there's no way BABA keeps going down from here. Like volume I saw there was a big volume spike on Friday. It was definitely more of a gamble, I would say, than like a thought out investment. But
okay.
my purpose for getting in was never to take a 10 to 12% gain. My purpose for getting in was if this runs, I could make 100% on this contract.
Mm-hmm. Okay. All right. And so with November strikes, let me look up the theta on that real quick just to kind of deconstruct this trade. You said is it the November OPEX?
November 19th, 175 strike.
The November OPEX. Okay. All right. Okay. You don't have to worry about theta for a while each day. Yeah, I definitely don't see this getting above 200 by November. I think that'd be hard. I think you are running into, it's 159 right now. There's a fair amount of puts. The largest put strike for November right now, as of just today's volume alone, is 160. And that's interesting because we haven't hit 160 on the day. Yeah, we haven't hit, well, we opened, but there's no way people were selling 160 premium for November strike. So that leads me to believe that we could start running into resistance between 160 and, if I look at the short terms, yeah, I see this struggling between 160 and 175. There's just not a whole lot of fuel short term. So if you're going to hold this one for, say, a 170 move, you're going to have to hold it for a little bit. Because there's just not a whole lot of fuel beyond 165, maybe 180, maybe 170. Yeah, I think you need to, if you want to stay long in this, you need to hold it for a little bit. I think you need to hold it till at least past Labor Day, maybe shoot for the September OPEX, and then see if you can get a push into like 170. You know, I think once you get above 170, the air starts getting a little thin. If you were just trying to day trade this, I would say as soon as this starts to close below the 20 EMA, then you would just unwind the position. For right now, I like the bounce. I like the volume on this. I think if you clear 160, if you get a daily close above 160, I would hold for like a 164, 165 mood and then reevaluate at that point. You need to reevaluate this on a case-by-case basis. If this continues impulsively, short term, you got a tailwind. If it struggles at 160 and it needs a couple pullbacks, you have less of a tailwind than you thought. That means there was less dip buyers there than you thought. So yeah, that's kind of what I'm thinking right now. Does that help?
Yeah, no, it does. I mean, I think, like you said, I'm going to watch this closely. If we do see, if I don't see this uptrend, like you said, so say we close above 160 today, but tomorrow we're back down, it's looking choppy. Maybe I just get out, cut my losses, and I look for other investment opportunities. But there's always more trades to be made out there. So yeah, that definitely did help. I'm going to continue to let it ride for now, see if we can get some more volume and rippage throughout the afternoon, and just hope for that close above the 160 level.
I think there's two alternative plays that you can do if you want to. If instead of just being long calls and long the premium, because you generally only want to be long calls if you're uber bullish. And you need that bullishness to stay impulsive. Because remember, gamma works in your favor when the price accelerates with you. But if the price slows down, gamma decelerates against you. So you got to look at it as gamma is very constructive when you're long options, but you need the market to run. It has to stay impulsive. Otherwise, the gamma gains aren't that great. So you could do is you said you're up 11% on this. You could close them out for a profit and you can say, hey, I really feel like this thing isn't getting below 153. You could say, okay, I'll wait for a dip to 155, get long a bull call spread. Because by selling a further out of the money call, you reduce the cost of your premium and you'll get some theta decay on that long call. And then pick a strike that you think this can hold above. Maybe you do like a 155, 170. Then you get a max payout. It's a much cheaper option. You don't need it to gain as much to make money on that. The other option would be a ratio spread. Getting long X amount of calls at a certain price, selling double the amount further up. That would be another way to do it. And so if the market tanks and you get to sell a ratio spread for a credit, doesn't matter how much it tanks, you walk away with the money. And then you set the higher strike at such a price that, hey, I don't think it's getting above 200. And so, the market would need to close above a certain strike for you to actually start losing money. That would be my two adjustments or potential option trades on this.
Got it. And yeah, Chris, I just don't know if I have enough capital in my account to be selling anything. It looks like we're seeing some volume coming in, some price action in BABA just since we started talking about it's continuing to tick higher. So I'm watching it, seeing if we get to that 160 level.
They're listening in right now. That's what it is. The BABA traders are listening in.
Yeah, I mean, come on, guys. We're not trying to move any markets, so calm down. But yeah, that was one. The contract was down about like a couple $100 this morning, and then BABA was down 3%. And then it came back, and now it's up a little bit. So I love the volatility. I think, I think anytime we see Whether the volatility be in the market overall or individual stocks, it's always fun to play those volatile names.
Yeah, volatility is probably one of the better option strategies out there that you can play, because there is generally a historical dislocation between implied and historical. So you have a built-in mechanism that is very, short volatility constructive. So do I have enough time for a couple Q&A questions?
Yeah, we got about 4 minutes till 2 p.m. Eastern to get to our next show. Sorry,
I'll make this brief. Easy Money 5 says, let's see. He was talking about Moderna will rip to 500, approved next week by FDA. I would not take that trade in a million years. And let me tell you why. First off, Moderna has about 40% of its options rolling off this Friday. I tweeted today. What did I say today on my Twitter account? I said, everybody's talking for long Moderna. I actually think Moderna struggles at 410. And so I look at Moderna and I feel like not only is this a key resistance, but when you have 40% of the options out there and the market is definitely long calls, then those calls are going to be monetized very fast. So as we get to Tuesday, Wednesday, Thursday, Friday, the long calls have an incentive to close out their call positions. That reduces the fuel out of the market. I see no chance of Moderna hitting 500 this week. And I think it having a hard chance to get to 500 next week, even with FDA approval, because you have so much fuel coming out of the market. So I would not take that. I actually am considering shorting or getting long puts right now in Moderna for a pullback. As we get later and later in the week, I will look to short Moderna even more and more.
Would this be a name that you would consider straddling? Or is that the right phrase? If you're getting calls and puts around the strike price, so that if it moves one way or in the direction, either way, you can make money off of it?
Generally, long straddles are only good when IV is low and the distance or the gap between implied and historical is very thin. Okay. And we're not seeing that in Moderna right now. Because if you get long a straddle, you're getting long the call and the put at the current strike or whatever it is. And again, you need that price to accelerate far. But if the IV is higher than the historical, then you're overpaying for the long options. And you don't want to do it on a straddle because then you're double overpaying by getting long the calls and the puts. So you need that gap to be closer on the IV and the historical. We're just not seeing that. Okay, I have about 1 more minute to answer a couple questions here. Shelly Serrano, good to see you again. Pelosi bought NVIDIA ASML. You know what? It's amazing. Our elected officials are somehow the best traders on the planet. I think if we did a study of all the elected officials and showed how many of them make money and then compare it to normal traders in the market, there would be a gap there. It's a very interesting coincidence. Wink, wink. Anyways, looking at financials and basic materials as well. My third one's focused on defense Vice stocks, though. I wouldn't want to be long defensive right now. Vice stocks, I understand that, but I wouldn't want to be long defensive stocks like defense stocks because of the withdrawal from Afghanistan. Those stocks have made on average 800 to 1,000% since we got in Afghanistan. And you might see, if this trend continues of pulling out of military excursions, you could see a little bit of reduction in them. But financials and basic materials, I think they're great longs. Okay, super rack question. I'll get to that. Put on Pfizer and BNTX. I don't think there's enough volatility in Pfizer for it to be worth it. BNTX, I haven't checked today. Netflix, I just got puts. I would want to see transitions on Netflix. I don't see a transition yet, but I'd want to see a transition on the 1 hour. We are coming into major resistance here between 557 and 570. But when I look at the 1 hour, I do not see a transition in the order flow. I see impulsive, corrective, breakout. There's no transition. We need to see evidence of a transition before we would consider selling that. We need to see where the option dealers and market makers coming in and saying, not happening. They start to transition the market. Then you might be able to take a long put. Until then, I wouldn't want to trade against this. Okay, I think we did it in time.
There we go. That was quick. Nice. Good job, Chris.
Appreciate it. All right, well, good seeing everybody again, Zinger Nation. I'll see you next time.
Thank you again, Chris, for joining us on Get Technical today. All right. We have Moon or Bust coming up right now. This stream will automatically redirect you to Moon or Bust, so do not go anywhere. Should be a good show. Great interview, as always. Talking some We're talking some NFTs, Glue Horse Factory. So some interesting investment opportunities there. So without further ado, let's get over to Moon or Bust.